I'm finally back in action at the office. So we're going to address on today's show, is it a bull market or bear market? Light up the comment sections below and let me know, are we out of the bear market and in the start of a bull market? I would love to know your opinion, and then we're going to visit the charts and see what that has to say. So without further ado, let's get straight into it. And again, I also just wanted to remind you of the Banter Bubbles charts over here. We have now listed PulseX as well as PulseChain. If you do want to sign in onto the Banter Bubbles, you continue with your Twitter just like this, and pretty much you see, there you go, you're in. Now you can click on the bubbles and you can chat with everybody and see what's going on with that particular token or coin. And yeah, it's a whole lot of fun. So let's get straight into the show. And I wanted to outline at least this tweet over here to start off with. So looking at a high time frame on the monthly chart by 𝗕𝗨𝗚𝗚, he says every single time that Bitcoin's monthly RSI bottomed and across back above the yellow, which is the moving average, the yellow moving average over here, it marked the end of the bottom and the beginning of the bull market. We exited that range nearly 2 months ago. You guys will remember I identified this for you on stream months back, and we looked at it. I said that would be an extremely positive sign if Bitcoin was able to recapture that. It means that any pullbacks that happen from that moment onwards most likely are going to be buying opportunities. So he says, and in the meantime, BTC's monthly MACD is also about to have its first positive momentum cross since the last bull market. It will all be so obvious to everyone in retrospect, which is true. But more importantly, what's most important I wanted to outline about that MACD cross is definitely going to be the cross above the zero line. So if you have a look over here, here's the MACD. You can see here's the zero line. As soon as you start to see these moving averages and the histogram flip above that zero line, that's when you really start to see the bigger moves take place. We do also have some important moving averages that we're contending with. So we have the 7, the 20, and the 50. This is the 20 over here, the yellow one. We need to cross above that one on Bitcoin. Once we get above the 20 MA, then it'll give a chance for the 7 to also cross back above the 50, which is the pink one. And once you start to get that posturing angled all upwards with the short above the medium above the long term, then you start to get powerful trending moves in place. So expect that there could still be a lot of pullbacks from this point onwards, but not necessarily looking for new lows. Now, remember, this is the updated chart that I have. Well, look, it's not updated properly yet. I still need to put a few more notes on. But you'll remember, this is what we're looking at for a very, very high time frame perspective. It's in my tweet thread on Twitter. Click in the link in the description below if you want to go through to my Twitter. It's still pinned to the very top. And it's all the way back in November. I outlined what I said. I titled it, Why I, a Renowned Bear. Why am I a renowned bear? Because at the time, everybody only knew me as a bear. And I said, this is why I, a renowned bear, am looking to flip bullish. And I think that we're looking at higher prices in the coming months, which we got. So I will be updating this chart. Please keep an eye out on it. But most importantly, what I wanted to mention over here is we just got to our 1 year mark prior to the halving cycle. So the halving cycle is going to be the green vertical line over here, estimated to happen around the 13th of May 2024. And you're looking at this line over here. Now, the orange one, that marks 1 year out. What typically happens is price starts to accumulate quite aggressively and start accelerate towards the upside right around that 1 year mark. And now we've officially reached that. That means this entire area over here, any price action that comes into this zone, timing wise, I'm not talking about price wise, I'm talking about timing wise. If you are a dollar cost average investor, this whole area is going to be an opportunity for you to get long, because every time, by the time we hit that halving cycle, price starts to rally aggressively. And yes, I understand that the fiscal policy of the US has a very, very important impact with regards to the halving cycle. So that is the whole, what came first, the chicken or the egg? The answer is actually the rooster, but that's a joke for another day. What does come first, though, the halving cycle or the liquidity that comes into the market? You need to pay attention to that. Usually it coincides that the US will start to implement some form of quantitative easing right around that period, and it just so happens to be in line with the timing cycles. Okay, next, we're looking at over here. Josh is giggling here like a goose, so is James. I don't know if you guys caught that joke. If you didn't, you'll just have to ask a friend. Okay, Let's have a look over here at the weekly time frame. We got all our important moving averages. The most important one in the weekly time frame is going to be the 200 moving average, which is the orange one. You'll remember that in previous cycles, this has always held as support, and it's mostly marked the exact bottoms on the previous cycles. So you can see bottom over there, price rallies. This time we lost it for quite some time and we've recaptured it. So we've come into that zone as a retest. You'd be looking for this level to hold. If it fails this level, that's okay, as long as it happens on a wick basis. Then you'd want to see price action come down very quickly into that 25k level and then start to bounce off of that zone and close back above, looking like a deviation. So far, so good. This is what you would expect at the start of a bull run. The next one, of course, there's no better name than this one, which is the pi cycle bottom indicator. It does exactly that. It determines when there is a bottom in the market, and it basically works off of high time frame moving averages. So at the moment, we have come back and tested that 111 moving average, which is the green one. Perfect retest, and we've been consolidating above that level. Now, it's only failed 2 times. When you had the pi cycle bottom flash, we came lower than that due to the FTX collapse. And the other time was, of course, the coronavirus dump, which took place over here. Yes, we went lower, but we very quickly regathered and reclaimed that level. So all in line with indicating that, yes, most likely the market cycle bottom is already in. So those $15,500 lows should hold. And you would expect price to continue to grind sideways and upwards. This is now, again, talking very, very high time frame. The only one that gives me a slight level of concern is around this Gaussian channel chart, more specifically the lucid SARS, which is a stop and reversal indicator. The asterisk signs that you see on the top over here, they have been broken, and that's going to start to form some sort of resistance. But it's not a death sentence. All that it means is that what you might see is price could consolidate within this region over here until such time as it squeezes in and then breaks above those SARs. And once it breaks those SARs, pretty much it will give me a lot more confidence to go long. I will explain my positioning and where I am at within the market towards the end of the stream, so stay tuned till the very end. What I wanted to outline over here is we're still stuck in a consolidative environment. That being between the upside level is going to be 30,500 is going to be your breakout zone. As soon as Bitcoin starts to get back above that level, and we'll be able to move this level down lower and lower with each passing week. But as soon as you get above that level at the time being, if it happened this week or next week, that's your breakout level. You're looking for a big aggressive move after that, most likely towards $35,000 to $36,000. All right, on the downside though, if you do see price action come back down from here, it will look like a trap, and price action, if it does take out 25,000, let's say 25,200 to 25,500, any closes below that level is your breakdown level, and you would expect that it's going to revisit the bottom of the Gaussian channel coming in at 20,684. If I'm not mistaken, that lines up with the bottom Bollinger Band as well on the weekly chart, is also coming in at that $21,000 level. So keep that your eye out on that. If there is some sort of a breakdown, I think that is going to be an opportunity to get extra positions in on the long side. I wouldn't be looking to necessarily short it all the way down. I think from a risk to reward perspective at the moment, if Bitcoin were playing out structurally what it's playing out right now, but price were around that 60K mark, yes, I'd be looking for a short. But because it's happening now at 27K, after we've already broken down from 69K and so much time has passed, I don't really necessarily want to be looking to short all the way down to 10 to 12Ks, $10,000 to $12,000. I'd rather be positioning myself with cash in the event that maybe you go down to those levels. Then I would look to just add into my positions over there. So right now, I'm definitely gearing up more to be a buyer at any pullbacks rather than looking to short down to new lows. Okay, looking at the MVRV-Z score, it's also historically been an on-chain metrics indicator that really helps to determine where the price is moving into a new bull run. And you can see the chart speaks for itself. You have the chart picking up again above the 0 line in the orange over here, suggesting that the MVRV-Z score is pushing price back up and you're looking for higher prices. You can line that up over here. You got it on the bottom. This is just a chart version. anytime that you start to break back above the green line, which is exactly what I just said, the 0 line, you're looking for prices to start to move up. And you can line this up with the hash ribbons indicator, which is a mining indicator. So it suggests whether the miners are profitable. So let's zoom in. Zooming in, you can see the clearly defined range that price was in, right? There you have it. Price was stuck within this range over here. This could simply be a retest into the top side of that range. And ultimately what you're looking for is a higher low. So higher low after higher low. Here's your main lows. Let's just change the color over there. Main lows, higher low, next higher low into this region could be a perfect opportunity to get long. But I always like to outline both sides, right? So here was your range. We've mentioned this before. This was your deviation below the range, and then you came back into that range. If this does turn out to be a deviation back into this range over here, well, then things can get bearish quite quickly, and then you need to start treating it as a range again, meaning that you're looking for price to be to oscillate anywhere between 25,000 and down to that $17,000 level. If it loses that, of course, it's going to get much, much worse, but we play it level to level. So also Jason Pizzino shows it really well over here in line with those halving cycles. He says Bitcoin's 6 monthly periods over time. The 4th period has been the most interesting with a test of the all-time high price. And then he gives his analysis in a video over here. But ultimately what he's showing is we've finished the first phase. The first phase is where you expect the market cycle bottoms to take place, right? Here's the first phase. In the second phase from all the way back, I think this was 2015. So you had the first phase. Second phase, you came for a double bottom, which meant that price didn't actually, it went marginally below. Almost, it's like really splitting hairs over there. This candle is marginally lower than the first phase. But for the most part, as you can see, second phase is continuation higher. Third phase, expansion. Fourth phase, you go through that major aggressive parabolic rally, which leads into the 6th phase, which is the blow off top. So let's have a look at it again over here. Now, this is looking at the 2019 cycle. So zooming in, you got your first phase. Price moves up. Second phase, a little bit of a pullback, but doesn't even come anywhere near the bottom of the first phase. Third phase, that's your COVID, obviously capitulation, black swan event. You can't bet on those. This is not something that you can chart. If it happens, that's why you want to be positioned with cash. In the unlikely event that something like that happens, you can basically capitalize on other people's losses. And next over here, we're in the first phase again. Second phase, what is that showing? Well, any pullbacks that come towards that $21,000 level would just be a massive opportunity to get long. And then you would expect that this trend would continue onwards and upwards. So that's what we're looking at over there for the cycle. Now, 𝗕𝗏𝗚𝗚𝗚 gives a very in-depth analysis over here, and he says, can this be the bottom on Bitcoin? Let's dive into it a bit more and then compare to the previous cycle. So he says, comparing this eco cycle to 2019, he's definitely not an expert in it, but let's take a deeper look. So let's have a look at his chart over here. You can see 2019, the fractal looks very similar. Of course, we had these consolidations around here, big push up, and then major pullback. It looks exactly the same, and now you're consolidating around that level, which is based off of your first initial consolidation. So he says here, do you see it? Yes, the time frame is different, 4 hour compared to an 8 hour. And yes, we had a BART move scam in 2019, which was in the blue over here. You can see that over there. And he says, yes, the lower high in 2023 took much longer than the yellow, but overall this does look really interesting. So let's have a look. How far are we within this eco cycle? Crazy enough, we're almost at the exact same point. While the 2018 and 2022 both took almost exactly 1 year, we would now be in that final stage of the eco bubble, meaning that you might be looking for a big pullback, right? But you can't expect that you're going to have a capitulation event. And also it's interesting when you tie it in with the conferences, right? You are looking for a little bit of a pullback following Bitcoin Miami if the conference cycle were to persist. He says, but can it be the same like last cycle? I don't know. Sometimes things are really that simple. And I always love this chart over here. This is, you have the least intelligent people who basically just max bid all the time. And then the smartest people who look at 100 different things also coming to the same conclusion. And then the guys in the middle that they say, no, there's no way. It can't be the same. Impossible. So he says, let's quote the best trader that we all know, which I think he got it wrong. I thought it was me, but let's just call it the second best. He says here, don't get too high. The entire banking system is not going to collapse overnight, leading to hyper-Bitcoinization plus $1 million BTC. Don't get too low when we get a correction. This wasn't a scam pump engineered by CZ for exit liquidity going back to zero. Stay even. Study 2019 and 2020. And this is really it. When your emotions get the better of you, either on the fearful side or on the greed side, that's really when you want to start to question your bias in your narrative and consider maybe flipping in the other direction. So he says, but no, we must have already bounced by now. We're going to 20K. Maybe price is not the capitulator, but it's time. My friend Don, who's also a great trader, by the way, wrote a small thread on this just now. And ultimately what he's looking at is, I'm not going to go through the whole thread, but he's looking at right about around where we're at now, the range low to form and basically price to head higher again towards 28K and then back towards the range high at 30,959, which is the established range. So he says, so what's the setup? It's very hard to time these kinds of moves. I think that you're better off holding spot BTC instead of trying to time it and max long on leverage. Invalidation for him would be a daily close below 26K. And I think that's not a bad way of looking at it. So check that thread out if you do want more information. Ultimately, what I'm showing over here is you can expect that there's probably going to be a big move. And if it does go to the downside and there's one more flush to the downside, I think that could present a big opportunity. So Fabian D says over here, volume is drying up very fast, already back to now the early Jan levels. Now, why am I bringing this up? If you'll remember, I was able to somewhat dictate that maybe that bottom was going to take place in January. And the reason why was this. When you have a period of very, very low volume and the market goes into backwardation with extremely negative funding rates, that is your indicator that potentially the market is going to move up. So you're looking at a similar environment over here, typical characteristics of low volume periods. You have volatility being suppressed, chop or bleed becomes the default. If you guys are trading over the last week, you must have got absolutely smashed. Unless you range trading on a super low time frame, you probably got chopped in and out of the market like crazy. Speculative rotations are short-lived, so the altcoin rotation game is basically over. Momentum is low and fake outs are much more common. Structural pressures have a larger impact on price, and basically there you have it. So what does that mean? You can expect that there is probably going to be something drastic that's about to take place. Could this be the etchings of that? Well, it could indeed. This is what you're looking at. As I just showed you on the other daily chart, you're looking at your lows, higher low, and potentially for this to maybe be your next high low. Now, how do you know you're wrong? Well, as soon as you close even one 4-day candle below this purple moving average, pretty much that would be my signal to start to exit. You'd expect those other moving averages, the yellow and the green, to start to turn back over. And then this is when you could start to get a massive move towards the downside. So if price does start to lose these levels, you have a very clear and easy invalidation. All you need to do is zoom in and pretty much just look at your next candle over here, or the previous candle, the red one. Let's quickly mark it off. Grab that, put on our magnet. Okay, if you see price coming under 25,810, which is similar to the tweet thread that I just showed you, a daily close under 26K, same thing over here. Any closes under 25,810, I would even go as far as saying on a 12-hour chart, for a low time frame, so you don't have to wait so long. 12-hour candle close underneath that, and I'll be looking for expansion towards the downside. As long as it holds above this level though, especially above the purple moving average, I'll give you the moving average. Let's just double check it. I think that one is the 30. He has the moving averages. Yes, purple is the 30 MA. So I got the 3, the 9, and the 30. As long as it holds above the 30 MA on the 4-day chart, I'd be looking at that as an opportunity to go long. You can see the buying pressure that has been kicking in over here as well. Next, let's look at the Bitcoin dominance. So Bitcoin dominance is still hovering right around that range high. We did have a little bit of a pullback over the last week or so, which is why you did see some of the altcoins run. But for the most part, this is still consolidating near the highs, near the range highs. And what does that mean? That means that there is a possibility that it could lead to a bigger breakout, right? Can you see how it's starting to look like a potential bull flag formation over here? Consolidation, consolidation. You know, that usually leads to expansion in line with the trend, which is currently towards the upside. So just be aware of that if you are looking to long altcoins with big size. Next, liquidity. People's Bank of China, completely gone. Liquidity has been wiped. That's why we have low volume, low liquidity. You got the same thing over here. Very, very little volume and liquidity with the net US dollar liquidity. And then the most important one for the crypto market is we now starting to continue that downtrend with the US dollar stablecoin supply. So strong move towards the downside. Looked a little bit promising over here. We said we want to see this consolidate and move sideways, but it's starting to make, again, lower lows and consolidating at those lows. So not good, at least from a stablecoin supply perspective. Next up, we're looking at the expanding megaphone pattern formation over here, which is on the stock market. I told you this entire gray area is a lot of resistance. If the stock market is able, this is the S&P 500 futures, if it is able to get back above the gray box and break the top side of this trend line and hold here for a couple of days, then that could be really bullish. That means that most likely you can expect liquidity to come back into the market and prices to continue. But for now, you have to treat it as it is, which is resistance. This area is all resistance, and I would definitely not be looking to go long into that resistance. If anything, I'll be looking for it to come round trip all the way back down towards that 40 region. All right. Next, what are some important driving events? Well, the 𝗕𝗍𝗕 letter gives it over here. He says we're now just 9 days away from June the 1st, which is going to be the day that the US Treasury said a default could potentially happen if the debt ceiling is not raised. So what does that mean? Probably they're going to raise the debt ceiling. I wouldn't expect that there's necessarily going to be a default. He says, despite all the headlines, odds of a US default are slim to none. Exactly what I just said. However, this debt ceiling crisis is just a near-term headwind. The real problem is rapidly rising US debt levels. In 10 years, the US debt is expected to hit 50 trillion. Over 20% of government revenue will go toward interest on this debt. And he says, meanwhile, the US now spends an alarming 24% of the GDP every year. We have a spending and borrowing issue. So this is kind of the narrative that's going on right now. Basically, the market has been pricing that in, and you can expect by June the 1st, it's probably most likely going to be out the window, and then we can focus on our trading ranges once again. The DXY, it met our target. We have T1, that was target 1. I said once we get here, this is the dollar index, we now need to reevaluate and see what happens next. Is this going to be yet another lower high? If it is going to be a lower high, so watch this area over here. If it starts to roll over, you're going to follow the yellow lines path, and then you're going to be looking at lower prices, right? At least on the DXY, which means it's going to bode well for risk on assets. But if it starts to close and hold above here and consolidate at this 103.6 level, then of course we're going to be targeting back towards T2, which is all the way at the top at 105.7. And the real action starts to take place with any closes above there. Because once that takes place and you close above T2, you have a W formation pattern, which is officially confirmed. And that could lead prices all the way up here to the yellow line, coming in at 108.6. So the DXY is something to watch for the rest of this week. This will give us a lot of direction and indication as to what may happen next for crypto. The total market cap. The full total market cap, Bitcoin, ETH, and all the alts, kind of in the middle of nowhere. Potential, it could be another high low. Didn't really make it all the way properly back to the support line at $1 trillion. Total 2 structurally looks a lot better. You can see it came perfectly into the mid-range. This is the mid-range level over here. Tag the diagonal as well. And technically, you would be looking, and again, I say technically, meaning from a technical analysis perspective, you would be looking for this area to potentially bounce, which means that Ethereum and altcoins should do relatively well. Same thing over here for Total 3, which is miners Ethereum. You ride at the mid-range. As long as mid-range holds, you could potentially move back up here. This would be the 0.75 level of the range. So what I mean, well, you got range low, you got 25% of the way through the range, mid-range. This lines up 0.75 level over here. Also matches up with the downsloping trend line, which means just a very small move for the altcoins, and then more than likely another rejection from there. So I know we're going into a very deep overview of everything in the markets. I haven't been around for a while, so just be patient. I'm getting to the low time frame soon, and then later on in the week we'll start to focus on altcoins and actual trade opportunities. This is just a big update today. All right, Bitcoin over here. Both Bitcoin and Ethereum, I'm going to show, is holding above its key monthly level, which for now, for the time being, is not too bad. Look at this candle that's happening over here. It means that bulls do have a slight chance that this could just be a deviation, hold above this level, and then potentially you reclaim the mid-range. If you reclaim the mid-range, this will all start to look like high low after high low after higher low on the daily time frame, and then you can target back up towards these higher regions. But we need to wait for confirmation. We're still kind of in no man's land. Here's Ethereum, same thing, key monthly level coming in at 1762, and so far you had a big move off of that. You're holding that level. That means you could potentially target all the way back up to that $2,000 mark that is on Ethereum. But you need to look at the pivot levels. The pivot levels must hold, and there is still resistance overhead for both Bitcoin and Ethereum. Where is your pivot level? Here is your pivot level. Pivot level is coming in at $26,862 on Bitcoin, which is also holding above that key monthly, right? So important zone. You can see the resistance over here, and we've been outlining this for quite some time as a potential bull flag. So you got the pole, big move up, in spirit of bull flag. They call it an in spirit of bull flag if it's at an angle, right? So if it's not perfectly straight up with a 90-degree move to the side, let me not confuse you, I'll just show you. So if it's not straight up with a pole and a 90-degree angle to the side, but instead it looks like this, that is an in spirit of bull flag, which still has a measured move towards the upside. So it means it should more than likely break in line with the trend. But first, you need to get above the moving averages. We have the 9 and the 21, which is the yellow and the pink. You can see it serving resistance over here. Price moved directly into that. Big rejection off of that zone. If you start to see it close below the yellow, below the 9 moving average over here, that would start to look very bearish. I would say it will lose the pivot level as well, and then it's going to look like a big bull trap, and you're going to continue on down. Lower end targets is your 200 EMAs coming in at 24,972. Okay, Ethereum. Same story on Ethereum, same formation or pattern over here. The only difference is Ethereum has its pivot level in a different place. Ethereum is at $1,863, and price is currently rejecting below that pivot level, but it is still holding above the EMAs, above the 9 and the 21 EMA. It's holding above that level. Be patient. I wouldn't necessarily say that price is just going to rally away from here if it does start to move out of here. What I would expect is something like this. This goes for both Bitcoin and Ethereum. You would expect that first it would have to hold above this level over here. It might start to reject again from the trend line, and then the EMAs will have a chance to slowly cross back up. Once that happens, then you can start to form a long entry, and then a break of that trend line means that you have confirmation that the bull flag is starting to take place and play out. Okay. Next, PulseChain total value locked is now 2 times Solana's. It's made it into the top 10, which is pretty big. Remember, PulseChain and PulseX launched, and full disclosure, I did get into the IDO for both. Here is the chart for PulseX. For those of you who missed it, I mean, it could be an opportunity to start to build a little bit of a position. You can see a clearly defined uptrend that is forming over here. Could this just be yet another high low? I think it's very possible, especially if Bitcoin and Ethereum play ball and continue to grind on up. And then you have Pulse over here. Pulse is, I can't find the chart for it on here. You guys let me know on Gecko Terminal or any of the dexes if you can find the ticker for that to actually chart it. But let's look at it over like 7 days. Kind of this is oscillating all over the place. I'm up 3x on my position from the sacrifice price. But yeah, I mean, the chart's sloppy. There's not much that you can deduce from this. I don't have an actual chart like this one. All right. I also wanted to give some free money away. So smash the like buttons. If you have not yet hit the like button, what are you doing with your life? Smash the like button. I've been away. Please let everybody know that I'm back. It does help to get the content out there. Now, when I give you these codes, it's first come, first serve. So when I click on the next tab, whoever gets there first is going to get the free money. You get $50, right? What you would need to do is you take that code and you're going to need to click into the promo code box under actually margin USDT, this one over here. You're going to click under there, promo code, and then you will click activate. So 1, 2, 3, here's the codes. There's free money. Whoever gets it first, that's 1 code, 2 codes. You just write that number in, 3 and 4. What I will try and do, I haven't done it yet, but I will put it into the link in the description below. The show's live, so it's not going to be done until after the show, but we'll copy and paste that in. All you need to do is sign up to Prime XBT. There's a link in the description. Click on Prime XBT. If you use my sign up link, which is this one over here, you will also get up to $7,000 additional sign up bonus. Same thing, type in that promo code, activate it, and then you can copy this promo code in and activate that one. You have to have $250 in the account though to qualify for this, by the way. Cool. Next, low time frames, the 4-hour chart. Now, you'll know that I like to focus on these crosses over here. More specifically, I like to focus on this cross when the high time frame 𝗬𝗓𝗧 breaks either up or down. So because the 𝗬𝗓𝗧 is broken to or the price broke down through the 𝗬𝗓𝗧 and the 𝗬𝗓𝗧 is bounced above and acting as resistance, now is when I start to focus on the 50 and 200 EMA on the 4-hour chart as areas of resistance. And you can see over here, look at the 50. So rejection, deviates above, right? Deviates above, rejects, deviates above, rejects. Is this going to be the same thing over here? We're coming into the 200 as well. There is a lot of resistance. I personally, before I get long, so I told you I'd let you know my position. My position is this. I was basically fully long in Bitcoin from about $19,000 and I sold everything at $28,500. Now I am looking to potentially get into a new position, but not until I see certain things take place. I would rather be patient, even if it meant I bought up higher. And currently I'm waiting for something like this. I would need to see this start to cross back up, price hold above that, and I would need to see price start to take out around those $30,000 levels. Personally, from a swing trader's perspective, this for me at the moment is a no trade zone. I'm not looking to really get long on any of these positions. I would rather just sit patiently, even though I do believe that it is a transitionary phase in line with everything I've just shown you. I think it's a transitionary phase and we're slowly moving into a bull market, but there is a lot going on with traditional markets, which obviously makes me have to be a little bit less risky than what I would usually be. So that's what I'm watching over here. Expect that this could possibly reject. And even if you do get above these EMAs, then you're still contending with the downtrend, again, coming in at 28,885. So you can see the downsloping trend line. I think the price action, the up move that we're having right now is a liquidity grab. And I'll show you on the liquidity chart why. Let's look at Ethereum as well. Okay. Again, one good sign, Ethereum I showed you on the daily, above the key monthly, also above the key quarterly, and it's now cleared this level convincingly with a close on the 4-hour above the 50 and the 200. So that's looking good. Let's see how the pullbacks take place over here. And if it gives this a chance to start to cross, then it could be looking good for potential long on Ethereum. Okay, the funding rates, very, very positive. You can see it over here on the daily. Funding has flipped completely positive. And this is what I mean, right? The funding was negative for a long period of time. And then you get these little liquidity grabs, right? So shorts get squeezed out of their position because everybody is chasing price down. Big push up. And the exact same thing has taken place over here. Let's see if we can just zoom into that level. I really messed that up. Let's just refresh that. Okay, so we're having a look at this on High Block Capital. Pretty good data that they have out there. I'll quickly show you the liquidation levels while that holds. look up at above over here is the bright yellow section coming in at 27,800. That is a liquidity level, right? So don't be surprised if you see price push directly into that zone, 27,800, and then eventually come back down. Okay, let's try that again. So zooming into this level. Got to be a little bit sensitive with this. They're still in beta version over here. So now you can see everybody was trying to short this level. Big squeeze, price comes through, but there's going to be a lot of liquidity that's forming below as well. You'll only see those levels brighten up once price starts to push a little bit higher. So expect these levels, these are short, sitting at 50x, 100x, all within this level. Look at the big blue lines on the right hand side. That suggests that liquidity is most likely going to get grabbed, and that's in line with price wise 27,800. Also wanted to show you on the 7-day time frame. Let's have a look at that. Okay, let it load. Whilst that loads, I'm going to show you also on the hourly time frame. This is kind of the range that I'm focusing on. So I've got the range low sitting at 26,553 and the range high at 29,989. So liquidity levels on the 7-day time frame. Also, you can see big bright level over here, 27.8. So in line with what I've just shown you, expect that most likely that's where price is going to gravitate towards over the coming days. And then lining that up. So here you have it. I had a different range beforehand, but I went back this morning and I just reevaluated the chart. This just looks like the much better line of best fit. You can see the way that price reacted over here. Deviation below, holds it as support, quick wick below, quickly recovers that, perfect retest into the range low over here, and price has gone up. So I think 26,553 in the short term is going to be your best level to put as the range low. You got your mid range coming in at $28,282. So it's written in blue on the right hand side over there. Again, look at how price came into there. Big rejection, and then that lines up right with the liquidity level. So if you see price push up through that 27.8, maybe you see something like this. So big move up, 20. Now you've hit the liquidity, big push up, maybe you deviate through there, and then you start to come back down. You'll have to target the lower liquidity after that. Next, what is the range high? Again, I'll give you the exact levels. 29,989 written in the white on the right hand side. So I'm expecting price to operate within this region over the coming days. And then I will let you know a big move is still coming. So keep an eye out for that. Next, we do have let's move out the way, the competition. You can win a Tesla of $40,000, a Rolex of $20,000 in second place prize, and third place is $10,000. And you have 8 days and 18 hours to go. Sign up to the ByBit link in the description below over here. You will get up to $30,000 in sign up bonus, and then you can join the competition. It is not too late to join. A lot of the people are mega wrecked on there, so you still do have a slight chance. And that's it from me, folks. It is good to be back. It's good to be back, and we have a whole lot to cover. I didn't even get to go through everything I want. We'll make sure you join me tomorrow, and we will cover the rest. Thank you all for watching. I appreciate all of you, and cheers for now.